Hey everyone, how's it going? We just got the closing bell. It is Monday, October 23rd. So let's see what happened in market and how we opened up this week. Actually, before we do that, I tomorrow I'm going to be traveling and I'm going to be traveling all the way through November 3rd. I'm going to be attending several conferences, doing some energy work, having several meetings. So I don't know that I can make every session live starting tomorrow all the way until November 3rd. So if I can't make it live, I will put up a little notice on the Zoom, just like you've seen in the last over the weekend. You've seen probably too many times. But what I will do instead, I will make a recording, and I will make sure if I can't make it in the morning, I will make sure that the recording is available before the market opens, at least half an hour before the market opens, and then after the market, it'll come whenever I'm available and free to do the video. I will create the video and post it. So I just want to let you guys know we have special circumstances. I just have a whole slew of meetings and conferences and energy work scheduled for myself, and I'll be traveling. So for the most part, in the next 2 weeks, it's just going to be recordings and not live sessions. Okay, but let's go ahead and take a look what happened today. First thing, we called out a VIX trade this morning, and we can see that this VIX trade is up 15%. So we are able to get in after the open at $3.70, that exact put that we talked about this morning. And just to show you that is a good price, I actually executed this trade at 6:44 in the morning. I bought the VIX 20th December expiration 22 puts. I was able to purchase it at exactly $3.70. So that trade just we didn't necessarily expect that it would make us money immediately today. I was saying, hey, sometime over the next 1 or 2 weeks is very likely, but today we already pulled back. You can see that trade is up 16%. I think we said 15% earlier, but I guess 16%. If we look at the VIX, we can see that it pulled way back down and then it retraced back up a little bit, which should mean that our S&P 500 did pretty well and went up. So if we look at our SPY, we came in, we went below the MA200, but we rallied and we closed. Well, we went actually quite a bit above the MA200, but we still closed above the MA200. That's really good. That's really solid. That's what we were expecting and hoping for, and it actually happened. So we're going to want to see this continue to close above the MA200, but especially have that low above the MA200. And if we can get 2 days above with the lows above the MA200, that is a very positive sign that we'll be on our way to the next wave up. Until where? At the very least, the EMA 8, most likely the EMA 20. If it's really strong, then to the MA 50, and if it's super strong, then we'll break through that MA 50. So for now, we're going to eyeball the EMA 20 with the expectation that we might pause or bounce back down at that EMA 8. Everything is so far is looking really good. If we look at the QQQ, same thing. We hit that MA 150. We had that horizontal support. We stayed above it. So same thing. As long as we get the low above this blue line right here, we're going to expect it to recover at least to the EMA 8, if not EMA 20 and MA 50. Looking at the small caps continued its decline downwards, so the risk appetite isn't completely back into the market yet. So that tells us that we can't expect too much of this. So that EMA target, that initial eyeball target that we're thinking at, is probably appropriate. We don't want to get too excited and say, hey, we're out of it. We're going to go up and make new highs. No, we're just going to keep it shorter term and just look for that bounce to the EMA 8 or EMA 20. So risk isn't completely in. So let's take a look at where we are in our sectors. So which sectors did well today? And we've got our TMF. So bonds did the best, low recovery. So that puts relief on the markets. And then it looks like communications and home builders. So that's interesting that home builders is up there today. Communications. So this is really interesting because we have a lot of major players in the communication sector reporting this week. We have Google. We just had Netflix, I think. We have what else is in here that we have? Meta, I believe, is reporting. Yeah, Meta is reporting. So we have some really large cap stocks that are reporting, and for us to bounce up like this, well, either we can, or say we're going to start chopping until we hit those earnings, or it's a sign that institutions are anticipating good earnings out of those stocks. So that is super interesting that of all the sectors, communications was the most bid up today. So we definitely want to keep our eye on that. If we see XLC breaking up here and breaking out, see, did try to go above both the EMA 20 and EMA 8. If we successfully break up above here and stay above here, that's going to be really strong for the communication sector. And then we'll start to see risk appetite come back into the market. So right now we have a perfect rainbow: red, orange, yellow, green, blue, violet. So it's looking strong. It held. The MA50 and the MA90 held. We're above it. And then we're very close to the EMA 20. We're very close to the EMA 8. Tomorrow could easily see us above it. And then with strong reports from Google, from Meta, from the other ones that are reporting, we could really see this fly up. Of course, if they completely flop and disappoint, we could see this come down too. So we're not getting too excited, but it's really, really interesting that institutions found that XLC was the most appropriate place to put their money this Monday. That's really interesting. And that is setting up, that's a pretty positive sign for the week in the S&P 500. Not that we're going to get green bars every single day, but it increases the chance that we get that we end the week higher than we started it. And if that happens, then we'll be above the MA 200, which is, again, positive news. Let's take a look at our day trades. Let's take a look at our day trades. There we go. So here we go, right here. This is our S&P 500. Came down right at the open. We came down to this purple line that we drew. Bear trap. People probably got scared, right? We had all these down days, sharp down days all last week. And we see it heading lower after the weekend. And it's doom and gloom. And we get this bear trap. We take out stops or we take out shorts right here. And then it's just up for most of the session. And then it came back down, and then we just ended at this other purple line right here, which is interesting. So it was strong, but then not super strong. Right? So that tells me that our earnings are still heavily at play. If we didn't have earnings to worry about, we probably would have ended right here, somewhere up here, where we consolidated right here. But then in the last, the last hour, where institutions are really trading most of their volume, you can see, look at these little volume bars, and then you see how big they get in that last hour, okay, especially that last minute, okay. That's institutions. Institutions are playing here. And so they agree that, yes, we should be, we're optimistic, but maybe a little too optimistic during the day. So that's really interesting to watch this shape right here. Institutions bring a little bit more caution to the table. This is probably algorithms, bear trap, algorithms bidding it up, making money, and then institutions saying, okay, well, let's calm down a little bit right here. So this would have been an excellent move right here, or you could have, on this pullback and breakout right here, this trend right here would have made you a good amount of money right there. And then Google, pretty much the exact same thing. So I won't go into too much detail right here. Tesla, very similar. Yeah, very similar. So I won't go into too much detail there. And then the other one is Walt Disney. Walt Disney actually also very similar. So basically everything following the market, we've got consumer discretionary or tech slash automotive, and then we've got a tech, and then we've got a I don't know what they consider Disney. Let's find out. I was going to say that it was, well, it's sort of discretionary, but for the most part, they actually consider it a telecom and an industrial. That's really interesting. Okay, so that's why Disney gets a little confusing of what it might be, but so it's sort of in a conservative and in a speculative area. It behaves a little bit more like a blue chip. So I would classify it more towards that industrial side as a blue chip. And so it's interesting that we get breadth, that type of breadth. We have a automotive, and we have a tech, and then we have a more of a blue chip type of stock that are all following the exact same pattern, all following the S&P 500. So everything is just kind of in lockstep with the market right now. And we're just really waiting to see the market direction. And a lot of that is going to depend on earnings this week. All right, let's take a look. I think that's about, let's take a look at what we have in our saved trades. Okay, so we have our aftermarket 2 paired trades that we talked about over the weekend. We said, hey, let's go long the strong stock and go short the weak stock. It actually worked sort of backwards on us because the strong stock, which was in the energy sector, pulled back a little bit, but the weak stock was weak. Even though the market was strong, the weak stock was weak, and it came down. So let's look at AAP. You see that? It actually weak. So this is why we short the weak stocks, because even if the market is strong, it won't get lifted up as much as the market. Or if it's really weak, like in the case of AAP, it's going to fall even though the market is up or flat. So this is what saved us right here in that pair, is that this AAP was very weak. And so you can see that on a similar dollar amount, well, we're up 31% on one, and we're only down 3.4% on the other one. And net right here, you've made $105. Right, so that pair is very successful so far. We had an Etsy put from the 19th, so that was Thursday. That Etsy has, it looked like Etsy might have gone against us on Friday, but then that put, this trend is reestablishing itself on its way down. We broke through that EMA 20 and EMA 8, and so that put is making us some money right there also. And then we've got this, the pre-market, the VIX. That's all we've got right now. Okay, so overall, we're doing very well. Not that we're great pickers, and this one we happened to get right from this morning, but this AAP, we just say, hey, let's just short the weak one, let's go long the strong one, and let the cards fall wherever they will. No matter what, I have a very high probability that the weaker stock will be weaker than the strong stock in a down market, or the strong stock will be stronger than the weak stock in a strong market, in an up market. And either way, I have a very good chance of making money on that spread. And then we had just the continuation of, so this one I believe was a 1% extrinsic value, 65 long put, and the current value, oh no, looks like at the money. So we went at the money here, and the trend just continued for us. So just shows you we don't have to be great at picking market directions, and we can get it wrong. You've seen me get it wrong a couple times in the last week, but if we can adopt the right strategies, then it won't matter. And actually, even better, if we adopt the right trading plan, it will matter even less. But we haven't gone into that level of detail or that level of education on the trading plans yet. So just for now, even just the power of adopting the right strategy and recognizing that we could be wrong sometimes, then but we can still make money when we're wrong. So hopefully you guys are getting a lot out of these sessions, and then let's just see for the next tomorrow, we'll just recap. We want to see that that low above that MA200. Wednesday, we want to see that low above the MA200, and then we're going to be much more optimistic that we're going to be heading upwards, at least for this next wave up. We do, in the longer term, we still need to break this series of higher or lower highs and lower lows. So at this point in time, we do this low, this low is still lower than this low, which is still lower than this low. This high is still higher than this high, which is higher than this high, and this higher than this high. So we haven't broken that trend yet. So we can't be too optimistic about the market, but we can be optimistic that this might be just for now a local low. And until we see that pattern break, until we see a high above this high right here, so we break through that MA50 and then break through this high right here, then we can't be too optimistic that the market is actually turning around. For now, this is just a pullback, or a potential pullback in a downtrend right now. But again, from this morning, we know that this is, so far, it's just a consolidation. Okay. We've gone down, I'll go to the low. Even at the low, we're down 8.75%. Even if it went down 10%, we still consider that a consolidation. So on the longer term, we're not super pessimistic that, hey, we're in a bear market, everything's going to be down for a while. We're still optimistic that this may bounce and go up. In the super short term, we're anticipating it to go up. And in the medium term, we're still in this downward channel. So we want to be very careful with our trades. We want to match our time frame with our viewpoint. Short term up. Okay, so if I'm going to play to the upside, I'm either going to go on a very short trade. So I'm going to plan on being in it for no more than a week. Maybe 2 weeks is kind of iffy in this market right here. I would want to be in a trade for more than a week, or I would go out to 3 to 6 months or a year if I wanted to play this longer trend that, hey, this is just a consolidation. We're gonna bounce up into the end of the year. So anything in between, so anything from 2 weeks all the way up to 3 months, I would be maybe consider bearish, because that's the trend. Okay, so just make sure you match your trade with the length of your trade, the timing of your trade with your viewpoint on the market, and then of course, hedge yourself. You could go long and short, like I said, in order to say, hey, I might be wrong. Then if I'm wrong, I still want the odds stacked in my favor. Okay, so that's it for today. Remember, tomorrow is for sure going to be a recording in the morning and in the afternoon, because I will be on planes tomorrow. And then for the next couple of weeks, more likely than not, you're going to have recordings rather than live sessions. So I may not see you, but you'll see me through the videos. Have a wonderful rest of your week and next week, but hopefully I'll be able to catch you guys at least a few times live.